Hey everyone, it's Ben Hardy here, and in today's video, I'm going to be talking about the state of the car market given what the Federal Reserve just did. Before we get into this video though, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you want to see more videos just like this, then I recommend you subscribe because I post content every single day. Let's get into it. So if you don't already know, the Federal Reserve did move forward with their rate hike of 25 basis points. And on top of that, they plan on doing more rate hikes throughout the course of 2023. They still have that target of over 5% with the federal funds rate. And so they're not slowing down anytime soon. And a lot of people thought the Federal Reserve might pull back because of the banking situation we've had over the course of the last week or so. But that's not what's happened. And the biggest reason why the Federal Reserve hasn't pulled back is because inflation year over year is still really high. It's over 6%. It's down from the peak, which was a year over year rate of about 9%, but it's still a lot higher than the Federal Reserve's target rate of 2 to 3%. And so until inflation comes down, the Federal Reserve is not going to pull back with these rate hikes. And one part of inflation that I think is really pushing the Federal Reserve to continue with these rate hikes is housing. Housing inflation is still sky high. And so until housing inflation pulls back a massive amount, I don't think that we're probably going to see any sorts of, pullback with these rate increases. But again, I'm not an expert in this field. Do need to state that. But with that being said, the last thing I want to mention in this section in the video is the fact that with these rate hikes and with the banking situation, the Federal Reserve has stated that the banking situation kind of acts as another rate hike. So this might give us a little bit of a longer pause until the next rate hike because banks have already tightened with lending, which will ultimately put downward pressure on, the housing market, for example. But again, too soon to tell exactly the effects of the whole banking situation over the course of the, medium term at this point. And so this leads us into the car market side of things. This rate increase will surely have an impact on the car market because this is going to raise auto loan rates. And I've stated this in many videos before. I'll state it again. Most people that purchase a new car are going to finance that car. The finance rate with new cars is like 85%. And so this is going to have a much larger impact on the new car market rather than the used car market. But there are going to be certain segments within the used car market that will be especially hard hit because of this rate increase. But this is just going to push everything up. Again, it's not a massive rate increase, but it's still a rate increase. And so all of the lending institutions are going to go back and they're going to release higher rates on auto loans, whether it's, a loan that's for only 36 months or if it's a loan that's as long as, 84 months or 96 months. So just expect rates across the board with auto loans to increase. So now let's talk about how this will actually impact the car market. Let's start with the used car market. More affordable cars are actually going to have upward pressure because of this rate hike, because what's going to happen is more and more people are going to be going after those affordable used vehicles. So vehicles that are basically under $20,000, because the more expensive vehicles are now even more unaffordable because, money is more expensive. And the supply with these more affordable vehicles is already really constrained. And we're already veering towards a market where it's going to become even more constrained outside of the rate hikes because there are just fewer people trading in these vehicles. There's just fewer of them available in general. And so what's most likely going to happen with these more affordable cars, again, used cars under $20,000 and especially used cars under $10,000, is the prices are going to keep going up because the amount of demand is going to increase and the supply is going to continue to decrease. Now, used cars that are $30,000 and above, especially $40,000 and above, they're frankly not going to have that same effect because people that are purchasing these cars generally will finance those purchases, and used car financing is getting extremely expensive. I mean, we're getting to the point where the average interest rate you're going to see on a used car for someone that has average credit is well over 10%. And so you put a 10+% interest rate on a, $30, $40, $50,000 car, and the payment is just astronomical. And so the affordability is not there. And so just expect to see some level of price compression with these more expensive used cars, or not any sort of growth like what you're going to see with the more affordable used cars. And now when it comes to the new car market, what we're going to see is with cars that are under $30,000 brand new, they're going to continue to sell out because, again, those are the affordable vehicles on the new car market, especially new cars that are under $20,000, which there's not that many of those left here in the US market anymore. And so just expect the supply to continue to be constrained with this market. Now, the thing that's interesting with this market is because these cars are so constrained, you're seeing dealers continue to tack price addendums on these cars, right? They're marking up these cars over MSRP, but then that kind of defeats the purpose of this segment of cars, right? They're supposed to be affordable. And so it's kind of this weird like back and forth that's currently happening. But regardless, all you need to know for today's video's sake is affordable new cars are going to continue to be very constrained with supply. Now, new cars that are $40,000 and above are going to continue to stack up on dealer lots with pretty much every single brand. Now, there are certain brands that aren't following that trend, like Toyota and Honda, for example. They're still pretty much sold out with like all of their inventory. Like I was at a Toyota dealership today, and this is a Toyota dealership that sells, combined, between new and used combined, usually about 400 to 500 plus cars per month. And guess how many brand new cars they had on their lot? Just comment down below how many brand new cars they had on their lot. Well, if you guessed 6, then you were correct. That is right. They only had 6 brand new cars available, and I'm sure that, within the next few days, all of those cars will be gone. And so it's interesting that those manufacturers are breaking the trend, but the general trend is cars that are above $40,000 just really aren't selling. But the trend then breaks again once you get above $100,000, once you get into the high lines. And the reason why the trend breaks is because highline buyers are just paying cash at this point. Now, highline buyers will sometimes use credit, right? They'll do leases, or sometimes they'll do traditional financing. But when interest rates are as high as they are today, and when leasing rates suck, they're just going to pay cash. And so with these highline purchases, they're not getting affected at all by the rate increases. Frankly, the rate increases are actually helping a lot of these highline buyers because, well, these are wealthier buyers that have money. And if you have money right now, like, you can make a decent amount of money completely risk-free. There are more, and again, we just talked about how the banking system is kind of all over the place, but because if there are more than enough, lending institutions that are offering, 5+%, guarantee on your money. And I mean, you guys can discuss what you think about that with everything that we've been, again, seeing with the bank situation. But regardless, people that have money are making even more money right now, and so they've got more money to spend on cars. And so again, they'll just go around this whole interest rate thing by paying cash for cars, and then the money that they don't spend, right, then they just park it, and then they make money on it because, again, interest rates are higher. So in summary, the Federal Reserve did go through with their rate hike, and they plan on increasing rates into the future. And so don't expect these interest rates to come down anytime soon. The Federal Reserve says that this is long term. That is the plan, is for these higher interest rates to be long term. And so this is going to have long term impacts on the car market. Affordable cars are going to continue to be extremely hot. And so supply is going to be very minimal, and values are going to stay high for those segments that are more affordable. And then with the highline cars, again, they're going to have a similar situation where supply is going to be very constrained and prices are going to be very high. I mean, there are so many highline cars, they're still going for $50,000 to $100,000 over MSRP. An example I used for this video is I just saw a used 2023 full-sized Range Rover the other day, and it was priced at about $100,000 over original MSRP used, and someone's going to pay that price because, again, those buyers, they've got the money. But the more, luxury-based cars for regular people, or just the nicer cars that regular people buy, they are not selling outside of pretty much Toyota and Honda. And so the manufacturers that build cars that are between $40,000 and $100,000, they're going to have to start releasing incentives if they want to sell cars with the direction the market's going in. Again, credit is becoming more and more expensive, and the demographics that purchase these cars, they don't have tons of money to invest in this whole increase in interest rate situation where they can make more money on their money. That's not their situation. Most of these people are living paycheck to paycheck, and so the only way to get a person to purchase a car that's living paycheck to paycheck is to give them a fat discount, or to give them a cemented interest rate. So we'll see what happens in the coming months, but I'm sure we're going to see more and more deals on these vehicles if these automakers want to actually push some volume within these segments. Let me know what you guys think about the whole situation. I'll see you.